has come from the house of PGIM India as well. Vinay Paharia, the CIO at PGIM India Mutual Fund, is joining us on the show to talk to us about just that. Vinay, hi, Anisha this side. Good to be speaking with you. I understand it's a multi-cap fund that you guys have launched or are looking at launching soon. Talk to me about why should investors right now look at a multi-cap fund as one of the better investment opportunities?
Hi, Anisha. Thank you for having me on your show. So I think when we look at Indian markets from a almost 2 to 3 decade perspective, we saw that there is a very common thread in outperforming portfolios. And this common thread is portfolios which contained companies which have higher than average growth businesses and higher than average quality, which means higher than average return on equity businesses. These have outperformed almost all other types of businesses. Having said that, in the last 1 year, we saw the reverse happening. We saw low quality and low growth companies deliver significantly higher returns compared to high quality and good growth businesses. So I think there is a time for this mean reversion. The markets have already started to rotate back into the high quality and high growth segments of the market post the election results and post the BOJ decision. So we are already seeing the green shoots for that. And hence, PGIM as a fund house which follows good quality and high growth businesses investments, that's a great strategy for long-term investing and especially good now. And hence, I think that should be a great opportunity for investors.
And what will be your stock selection criteria? Will you be more focused on mid cap or small caps or large caps? What would be that breakup of these three categories?
Sure. So I think as the name suggests, this will be investing in all segments of the market, be it large cap, mid cap, or small cap, largely driven by bottom-up stock selection. And that is the beauty of this entire construct of the fund. Since it can go around investing in large, mid, or small, whichever is an attractive segment of the market, it is enjoying that sort of a flexibility. And at the same point of time, it is semi-passive as far as capitalization construction is concerned, because the portfolio managers have to invest a minimum of 25% of the fund assets in either large cap, mid cap, or small cap. So all these three segments, there is a minimum 25% of the fund assets which have to be remained invested in. So I think there is a good balance of all segments of the market, and clearly the portfolios will be constructed completely on a bottom-up basis.
As you were mentioning that you would look to invest in sector which looks attractive. So what according to you is attractive right now? Large cap, mid cap, or small cap?
On the margin, from a valuation perspective, large caps are attractive. Having said that, when we look at mid caps and small caps, they are valued at a rich valuation today. But there are large number of these small and mid cap companies which are growing at an exponential pace. And if they are held for a minimum period of 3 to 5 year period, they should turn out to be good investments. So I think in the near to medium term, definitely large caps steal the show. But from a medium to long term perspective, there are lots of these high quality, high growth, mid and small caps, which are very attractive. So there are themes, there are sectors which we are very positive on. And some of the sectors like, for example, healthcare, consumer discretionary, financials, these are sectors where we are able to spot opportunities in terms of both these high quality and high growth companies.
Before I let you go, Vinay, what will be the differentiating factor you think versus the rest of the multi-cap funds? What's the USP as to somebody should look at this NFO versus the rest which are there in the markets already?
So Anisha, I think most of the investors diversify their portfolio based on asset classes or different capitalization segments of the market. But today, if we look at investors' concentration, they are largely concentrated in the low quality or low growth segments of the market or segments which are currently in momentum. I think PGIM portfolios will be invested in the high quality, high growth segments of the market, which are seeing a turnaround, and they have seen a very long-term outperformance from a business construct perspective. So I think that is going to be a very big differentiating factor for PGIM portfolios versus rest of the fund houses.
And I remember having this conversation with you earlier, and you said a very interesting line that we are taking up borrowed returns from future, that we have run up ahead of the fundamentals, and it looks like we're just running ahead further because we're literally staring at the all-time high levels. How difficult it is to kind of pick stocks right now in this kind of market, and what would you recommend investors to do? Trim some profits, book some profits, or just stay invested?
So Anisha, yes, we have definitely borrowed returns from the future, and this is very pronounced in the low quality and low growth segment of the market. Remember, I said there is a big wedge between the type of returns both these segments have delivered. Like, for example, the high quality and high growth segments have actually underperformed the low quality, low growth by almost 35 to 40% in the previous year. So I think there is a clear bubble which is brewing in the low quality and low growth segment of the market, which is what we would want to caution the most of the investors about. And clearly that's an area which you should avoid while constructing a portfolio. Whereas if you are optimistic and you want to create a longer term portfolio, clearly there are a lot of opportunities in companies which are growing faster than average and companies which have got returns on equity better than average.
Thank you, Vinay, for joining us and giving us those insights. Moving on,
Thank you.
If you like this video, then like, share and subscribe to ET Now.